Yeah. And I'm happy you brought up the student loans and just like the college financial burden to begin with, because what I'm seeing now too, it's because of Corona and this quarantine and the social distancing, is how quickly the our friends, our families, our nieces, nephews, kids, everybody's just fully embraced online learning. And schools have literally ramped up internet college education. College education's online now, high school, and now even elementary and kindergarten. It's all just working. From a college standpoint, though, do you think that what's happening right now is going to have any type of long-term disruption in the college financial system? The loans continue to rise, as you said. Most people are leaving college in debt. So are you seeing anything from an online learning standpoint that may actually impact the future of that system, that maybe college is a bubble in itself?
I think it's potentially an issue for the future. Everybody tells you growing up you have to have a college degree to get a job, when in fact, as you get older, you know that's not necessarily the case. How many people do we all know that's out there that go to college for a specific degree and then go do a job in something completely different?
Right,
That happens a lot more than people realize.
right,
I think the online education that's being forced upon us today could start a precedent for future. And you might see more of these online college programs
mm,
replace in classroom, because then the colleges, what happens? They can reduce the number of professors they have to pay, reduce the number of supplies they have to provide for children. So it has a trickle effect. If they can still charge an expense to the student to get the degree online, but not have the overhead of paying professors or supplying things in the classroom, I don't see why they wouldn't do that.
right,
But
right.
that could be a long time down the road. Me and you may never see that,
Hmm.
but it could definitely take place. When you looked at what's going on today, the first schools to go online were who? The Ivy League.
Right.
Harvard was one of the first schools to say, that's it, everybody off campus, we're going online only. Princeton was to follow, George
Mm,
Washington, and then
right.
other universities continued to follow their footsteps.
Hmm. Got it. No, that makes a ton of sense. I didn't even think of that too, with the Ivy Leagues kind of leading the way. I've been watching more locally, but it's true, they were the first ones that kind of
Yeah.
dove in there. Um, so switching back to trading, let's say, I'm an individual that likes to do my own trading, either through online tools or some of these emerging financial tech platforms. If I'm not working through an advisor or another broker, what products or markets should I be watching really closely right now as the Corona crisis kind of takes its place here?
If we're looking in today's economic markets, everything over the past 3, 4 weeks has gone on sale. It has dropped in price. So looking forward, and I today did this for my clients, we invested into municipal high yield bonds, convertible bonds, and some ultra short fixed income bonds.
Mm,
What does that mean? Those are conservative products that can provide some dividends and yields into your clients' accounts, make them money without a lot of risk. You're tiptoeing back into the market after it's sold off 30, 35%. Coincidentally, the three things that I just mentioned that we purchased today, we sold out of the same three of about 30, 60 days ago when they
mm,
were up for the year. So we sold them when they were up about 3, 4% for the year. As of today, they were down 15 to 20% for the year.
wow.
We sold them high, we bought them low because we believe the market's going to start coming back up.
Yeah, yeah.
A lot of people say, well, that's boring. I want to own Apple, Google,
Mm,
ExxonMobil, Amazon, Facebook. And those are all valuable investments. And you could purchase things like that inside of a mutual fund or on their own. And I believe, besides the three investments I just mentioned, there is a lot of value to be had in U.S. companies going forward,
mm,
because U.S. economics is strong. The fundamentals are still strong. We're just going through a geopolitical pandemic
Mm,
that's causing this market to sell off. Unemployment rates rose to over 3 million today.
yeah, crazy.
Many people know that's temporary because of what's going on.
Hmm.
People are filing for unemployment because they're not getting paid. They don't have a job.
Right.
Um, but there is economic opportunities out there. I'm not telling you to go buy this company or that company,
Hmm.
but to look at the U.S. companies or some reasonable um, fixed income positions to start um, would be a good prudent idea.
Got it. Got it. No, that's great advice. And even it's funny, like I remember a few years ago when I was just like trying to update my own education. I was like, why don't I own Apple stock? They're just releasing the iPhone, and I remember getting talked off the ledge there, and kind of getting the real time education on that. Um, so now, I'm thinking like I work for a real estate advertising platform, and I spend a lot of time thinking about that market, just the real estate market in general. How do these economic trends impact that sector specifically? Like, does it does it actually do the inverse of real estate? Because now you're talking about a tangible piece of property or building versus a stock, a bond, or a mutual fund. And if so, is that where people should be investing money short term, or does real estate just follow the same trends and that's going to be down too? I'm very curious of how that works.
Real estate sector is a very volatile sector, meaning it's going to have its ups and downs quickly. Um, Again, I'll go back to 2008. The real estate market crashed.
Hmm.
That was due to the banking system and the credits um, losing their values. Today, we've seen actually February home sales, residential homes, had a great month.
Mm,
Sales were up. Unfortunately, though, it's not the same for commercial real estate, which is having a harder time
mm,
solely because after 2008, the banks were forced to have to keep capital requirements for themselves, meaning they can't give out for commercial real estate as regularly, normally as usual. So
hmm.
now it's a little bit harder and takes longer to get those mortgages for commercial real estate.
Hmm.
And now we're starting to see for individuals who are trying to purchase a home, it's taking longer because um, interest rates have dropped. So millions of people are trying to refinance the homes, which is
Mm,
basically just prolonging the process.
right.
Um, but it's still, real estate is never a bad thing to own. Most people say I just spent $300,000 on a piece of property and it's gone. No, it's
Mhm.
not gone. You still own it, and it will be worth more in the future. It's just not, you can't spend it.
Right. Right. So, and you kind of brought this up, speaking of the interest rates piece, those seem to be dropping, or at least rumored to dramatically drop. Every day I hear that they're not going to be any rate. It's going to be super low. And this goes across everything, not just real estate. So, should we as consumers be thinking about running to the bank and refinancing our homes or our cars or getting other bank loans right now? And if not now, like what's that percentage number that makes it like a must do? Like, all right, go to the bank and get this done because this is unprecedented. Like, what's your feeling on that?
Interest rates are historically at their lows today.
Mm,
You ask our parents, grandparents, what their interest rates were when they were going through this, they were 7, 8%.
mm, wow.
Today, we're looking at, we'll call it 3.5 to 4%, somewhere in there.
Yeah.
Now, 2 weeks ago, what did we see due to coronavirus? The U.S. Fed cut interest rates twice within a week. Um, that doesn't mean that your mortgage rates are going down. One
Mm.
does not have to do with the other, and everybody has that misconception.
Oh
What is
yeah.
the Fed fund rate? The Fed fund rate, which they cut, is the dollars that banks lend to one another. That's the rate that they are charging each other as
Hmm.
banks. And to make it worse, which is why I was not a proponent of cutting federal interest rates, is that's what the government is paying us to hold U.S. bonds in our portfolios. So why would I want to give the U.S. government $10,000 if they're only going to pay me 1.25%?
Mm-hmm.
Historically, that should be 3, 4, 5%, and that's
Right.
something people are looking for today in their investments, is something that's yielding 3, 4, 5%. Now those are out there, but they're not as common and not as available as they once were.
Right.
So with the Fed cutting rates, the interest rates for mortgages have gone down, but they're not going to be as low. And people believe that to be, but it's not the case.
Mm.
So when you're looking to refinance today's market, if your mortgage is over 4.5 to 5%, you should definitely look to refinance.
Mm-hmm.
If you're around that 3.25 to 4.5, you're gonna spend money to maybe not really get much lower.
Right.
There are fees involved. They're not doing this for free,
Mm-hmm.
and so you have to keep that in consideration.
Right.